Hey guys, so today we are going to go over Las Vegas Sands. And this business, it has, if you understand MGM Resorts, which I covered before with Abe and with Dominic, we went over through the business and everything. It's very similar. It's casino resorts type of thing. But Las Vegas Sands is interesting because they derive a lot of their income actually from two international companies, Macau and Singapore. And I'm going to share my screen right now to go more into detail. This is Zach's reports, of course. I do like this a little bit better. And it seems to me, just to be clear, they get about 60% of their money from Macau and the other 30% from Singapore. That's their revenue breakdown. And they're resort and casino, of course, and these are the reasons to buy. They generate significant revenue from Macau, like I was saying. They invested more than 16 billion in Macau since 2004. They did take a hit during COVID, just to let you know, because of the lockdowns and all those things. But their business has recovered since, and it looks pretty good. We're going to go through the financials in a bit. We're going to go to Yahoo Finance. But yeah, so they went. They have investment in Macau, and a lot of tourism is coming back to the region, which is also good. It helps with the resort occupancy, hotel occupancy. You have visitation recovery, and Singapore to drive growth. And they also invested in Singapore, which is great to see. Singapore has solid growth. Their rolling revenues in Singapore were up 8.2 billion, 15.5% year over year. Excellent. That's what we want to see. And mass gaming wins at MBS were 687 million, up 25%. Excellent too. So, and MBS is Marina Bay Sands in Singapore. That's one of their resort properties, casino properties, however you want to phrase it. So, all great things to see, but there are, of course, downsides with the company. I would say one is they're gonna say debt and competition. So we'll go over that more in detail. So yeah, big reason right now, high debt concern. So I'm just going to read this little, a few sentences here. So as of March 31st, 2024, the total debt outstanding, excluding finance leases and finance purchase, was 13.94 billion, compared to 14 billion as of December 31st, 2023. As of the first quarter 2024, unrestricted cash balances amounted to 4.96 billion, down from 5.1 billion, reported in the previous quarter. Although debt level was sequentially lower, it is still higher side compared to the Las Vegas Sands cash balance, so they're a little bit worried about that. Of course, Macau, China regulatory issues. So there are some restrictions, regulatory issues with Macau because China technically owns Macau. So there are things with that, and of course, hiding competition between not only DraftKings, which we covered, and Flutter, which owns FanDuel, and MGM, which owns MGM Bets, and MGM itself. They're more brick and mortar. It's a highly competitive industry, so people should keep in mind that it is a super competitive industry. So I'm going to go through the finances because the finances actually look pretty good overall. I would say I think they look pretty stable. Share my screen with that. Okay, so the finances, they look pretty good. They're not that bad. In 2020, they lost 2.5 billion, COVID. 2021, 824 million, still COVID. 2022, 1.5 billion, still kind of COVID. And then 2023, they fully recovered. They're free cash flow positive here, 1.9 billion, and now 2.2 billion. So they're going on this nice, I would say, steady but upward trend a little bit. And I think the valuation may reflect that in the tip ranks. So let's get to that too. So tip ranks is saying that it's 39% undervalued. Currently the shares are $44.25, and they think it's going to be an average price of about $61.55. So this could be a value trap. I don't think it is. I think they have steady growth. Their finances do back it. Yes, there's fierce competition, but I think they're able to manage their debt the next 3 years, I would say. And even Alpha Spread is saying the same thing here. Their shares are undervalued by 26%, and this is on Wall Street estimates. Historical growth is pretty much in line. It's like $60 a share. So more or less, I think the company is slightly undervalued, not by a lot. But I would say that if you want to feel comfortable in investing in this, I would say you always have to look at their competition, because this is a highly competitive industry. You have to look at DraftKings, Flutter, MGM, Caesars Entertainment also, that's another good one. So you just need to know how these companies are, how they make money and things like that. But I don't think this is overall a bad pick. So I just want to say thank you, and if anyone has any other recommendations, please let me know. I'm always open to doing a video. Thank you.